Ladies and gentlemen, good day, and welcome to Sundram Fasteners Q4FY25 earnings conference call hosted by Avendus Spark. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mukesh Saraf. Thank you, and over to you, sir.
Thank you, Avirat. Good morning, everyone. Mukesh Saraf here from Avendus Spark. Appreciate everybody logging in. From the management team, I'm pleased to host Mr. Dilip Kumar, Chief Financial Officer, Mr. S. Bharathan, Executive Vice President Marketing, Mr. R. Ganesh, Vice President Finance and Projects. I'll now hand over the call to Mr. Dilip for his opening remarks, post which we'll begin the Q&A. Over to you, sir.
Yeah, thank you, Mukesh. Good morning to all. Welcome to a discussion on our annual results for the financial year ended 31st March 25. First, the good news, we have crossed the milestone of 5,000 crores in the history of the company. We closed the year at 5,231 crores. The other major item I would pick, which I have noticed in the results also, is the inventory build-up which we have made in anticipation of the U.S. demand from our key customers. Notwithstanding the tariff, things are not bad, and we have built quite a bit of inventory in anticipation of that demand, which has also pushed up some of our conversion costs. And as you also know that at any point in time, we have a large number of new products under development, and we've also had a significant capital expenditure this year. So a lot of spares to incurred by your expenditure. And we've closed the year with a profit before tax of 668 crores. And after accounting for the exceptional income of 12.5 crores, which arose out of testing the performance of the overseas subsidiaries for impairment, for which we had got a provision in the earlier years, we have reversed some of those provisions, and we finished the year at 680 crores. And after the effective tax rates have slightly come down because of preparable tax assessments, and the profit after tax at 517 crores, which is 8% growth in the EPS, is the highest in the history of the company. Now, coming to the quarterly performance, again, we have registered 1,362 crores, which is highest for us for the quarter. And like I explained, there has been a significant inventory build-up, which has increased some of the conversion costs. And as inventories get liquidated, we expect this to get corrected, and both the contribution and the EBITDA margin to resume its normal trend. And the fixed cost, good news for us, has been stable across the quarters. And the borrowings have gone up because of the working capital build-up which we have made in terms of inventory and receivables, and also the higher capital expenditure. And we finished the quarter with, after accounting for the exceptional income, at 134 crores, which again is the highest in the history of the company. With this, and I think again all our subsidiaries have done reasonably well. Like I said, the overseas subsidiaries impairment testing was done, and therefore the valuation came very positive, and we took a credit for the exceptional income. And both our domestic subsidiaries have done reasonably well. With this, I bring my opening remarks to an end. We are happy to take questions from the analysts.
Hello. Hello.
Yes, we are happy to take the questions now.
Okay. Sir, I would request you to speak up a bit louder. You're not very audible.
Yeah, as loud as possible, as close as possible to the phone. So I will do my best. I've finished my opening remarks and...
Okay, we'll start with the Q&A, sir. Yes, sir.
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishabh Shah from Bugle Rock PMS. Please go ahead.
Thanks for the opportunity and congratulations on a great set of numbers, sir. In the previous call, you mentioned that just by offering a lower price, a customer would not switch the business. So in a business like Sundram Fasteners, when does a customer never ever switches his business? So what are the switching costs for a business like Sundram Fasteners?
Yeah, switching costs is not an easy proposition for the customer because it requires product validation and it typically takes more than a year and also considerable amount of money. So the customers are always wary of switching from one supplier to another supplier for a few cents here and there. They would rather work with the existing supplier if it is on commercial reasons. So it is not easy, especially for a product like ours where it is a lot of design and engineering and value addition is there for customers to simply switch. It may happen in the aftermarket, but not in the OE business.
So just to follow up on that one, in the aftermarket segment, how good is our performance?
Sir, can you repeat your question, please?
So in the aftermarket segment, how good are we in the industry?
How good are we in the industry?
See, I think we have done well last year as expected, and March was a very good month. So as expected, April was a bit down. But on the aftermarket, by and large, we've been expanding our network distribution as well as on the direct industrials, we are having a good growth.
Okay. So my second question is, in the previous call, you mentioned that you have entered into spaces like aerospace and defense, mainly to upgrade in terms of quality and global competitiveness. So how is that space working out for us?
I think with respect to aerospace, we are present through fasteners and we supply materials to customers like either General Electric or your HAL. And these predominantly form part of usage of exotic materials. So, and that space we are able to penetrate and gain share and grow the business. So, from a current level of approximately 3 million, we will be looking at close to 6 million in the coming year, and we have plans to grow that to 8 to 12 million. With respect to defense, I would say that we are still in the startup phase with respect to development of parts and validation at customer end.
Okay. So my last question is, what are the top 3 or 4 priorities you would have for the next 3 to 4 years?
I think with respect to the top priorities, I think growing with our existing key customers, gaining share of business and working with them on their new platforms, either the conventional ICE or the EV or whatever new models that are planned by the customer, we will work with them. Apart from that, we are focusing on non-auto segment, especially in the areas of wind energy, railways and aerospace. So these are the broad sectors or areas in which we will be working in the next 3 to 4 years.
Okay. Thanks, sir. Thank you so much.
Thank you. The next question is from the line of Abhishek Jain from Alpha Accurate. Please go ahead.
Thanks for the opportunity. Sir, how was the revenue mix in export versus domestic in this quarter? Hello?
With respect to the revenue split, it's about 70% coming from domestic and 30% from exports. So So that has been the quarterly mix for the current year.
Okay. And in export, if you can throw some light, what kind of the tariff charges imposed on your product, and how do you see the challenges over there and at the current situation? If you can throw some light on it.
As far as the tariff is concerned, I think it's still work in progress. Most of our customers, especially the major customers, have not yet firmed up their responses, as the tariffs on their specific parts are not very clear as yet, and they are working out their responses. In fact, most of them have not even approached us for any with any proposal. But that said, we are definitely expecting customers to come to us on tariffs going forward. As of now, only some customers with whom we don't have much of an exposure have approached us for any tariff related issues, and the major customers are still assessing the situation.
I think just to supplement my colleague, I think the OEMs are bracing themselves for that their profits would take a hit, because I think they are looking to bear the significant portion of the tariff. And I think we have also been seeing in the media, they have cut dealer incentives. The prices, retail prices, consumer prices are going up. I think they have always been supportive of the supply chain, and that's the positive statements which have emanated from the global OEMs so far.
Okay. And my next question on this non-auto segment, as you are quite focused on the expanding business in wind and aerospace. If you can throw the light, what is the current revenue contribution from the non-auto segment, and what's your medium to long-term guidance for the revenue from non-auto segment?
See, I think with respect to non-auto, at the moment we would be close to 1/3 of the revenue comes from the non-auto segment, and while the aspiration is to take it up to 50%, but the immediate focus is on growing the wind energy business, where in our earlier calls we had mentioned about close to an investment of 85 to 90 crores. That project is up and running, and we have been able to meet the customer requirements. And based on the performance, customers have come back, and we are on the negotiation table for furthering the revenues and taking the next phase of action. And with respect to next phase of action, we are also planning for further investments to grow the business. So from a current level of 300 and odd crores, aspiration is to take it to 600 crores in the wind energy space.
Okay. And sir, my last question on the product-wise standalone numbers, like in a fastener, pump and assemblies, and which segment you are more positive in terms of the growth in the next 2 years?
I think with respect to growth, we will be working on all the engines of the Sundram's product range, be it fasteners, be it pumps and assemblies. So we will be growing in each of the segments along with the customer growth in terms of organic as well as growing the share of business. So it is not that we will be growing only one particular segment. That has not been our strategy. So we will work with the customer in all the product segments. And if you look at fasteners, where we are present 35 to 40% of the total revenue, and followed by cast and machined assemblies at 30%. So we will continue to work with the customer.
Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Sahil Sanghvi from Monarch Networth Capital. Please go ahead.
Yeah, good morning, sir. Am I audible?
Yeah.
So my first question is with respect to whatever developments have happened on the tariff front and overall demand in the US. I just wanted an understanding on are we still targeting a 250 crores of revenue from the EV business in FY26, and will that meaningfully scale up to its full potential 450 crores in the next year? How should we see this scale up?
I think at this point in time, it's anybody's guess. But however, even prior to these tariff concerns on the EV side, we were just hoping that things would happen. There was some pushback and things have started moving now. But with this tariff issues coming up, there seems to be some delay and some slowdown in the EV side as well. But then from next quarter at least, we are hoping that things would improve. But still, the last word is not said on that.
So you expect the commercial sales to start from 2QFY26? Is that understanding correct?
Can you repeat the question, please?
You expect commercial sales to start from 2QFY26. Is this understanding correct?
So, see, I think with respect to commercial sales, it has already started. So, the product development, approval and commercial sales have started. I think the question from your end was whether it would be at the
targeted level.
There we are seeing a little bit of slowdown in view of the Trump and tariff effect, but it will pick up as indicated by customers starting from Q2 and Q3 of current year.
One other point, sir, is that while for capacity planning and capital expenditure purpose, we have a program life of 5 years. But based on our past experience, we know that some of the products have much longer life, shelf life, more than 10 years. Some of the cases where we've been supplying products. So you don't have to worry about the predefined time frame of 4 years or 5 years. These will have a fairly long cycle. These may be temporary, turbulence in the market. Once these trade tensions abate, the long-term indications and projection trend will continue.
And sir, any kind of budgeted target for exports in this year, FY26?
I think the current year budget, we will be looking at close to, say, 200 million. So that's the number which we are looking at.
Got it, sir. Got it. I'll come back in the queue, sir, if anything. Thank you, sir. Thank you.
Thank you. The next question is from the line of Rajiv Bhansali from Omkara Capital. Please go ahead.
Hello, good morning, sir. So my question is regarding the capex done this year, which is around somewhere 396 crores. And can you throw some light on the next year capex plan?
So,
Hello?
So, based on the current indications and the internal plans which we have made, we should be incurring another 300 crores of capital expenditure minimum.
And what about the current capex done this year? Like, did we improve the current capacities, or it was regarding the new non-auto segments of aerospace and other wind energy you mentioned?
So this will be broad-based, sir. This will be for our traditional fastener business, aerospace, and also for the wind energy fasteners. This will be spent across all our businesses.
Okay, sir. And coming back to the inventory build-up you mentioned, so are you seeing some traction from the current clients, or is it regarding the domestic market, or is it regarding the exports you are saying?
We have built a bit of inventory with keeping the overseas market in mind.
Okay, sir. Thank you.
Okay.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Hello.
Yeah. So we have nothing further to add, and we thank all the analysts for having joined the call, and we look forward to interacting with them in investor conferences and in the coming quarterly calls.
Thank you.
Thank you.
On behalf of Avendus Spark, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.